How to prepare for a recession. Welcome to Achieving Success Through Failure. So, why should I care about a recession? I'm not invested in stocks, bonds. I'm just a normal average Joe who's working. Well, you have to understand how it actually affects you. Whether you're invested, people may think, well, I got my 401k, I'm looking at the long haul, I'm not retiring. Good for you. However, the most important thing to understand is your balance sheet. That's number one. With the current inflation, how does that actually affect the amount of money that you're saving? Number two, do you have enough money saved for a rainy day? Number three, most important thing is actually job security. If a recession does occur and it affects multiple businesses and some of the businesses have to cut down or even close, then the question is there a possibility that you could be part of it? And if it is a possibility, how can you prepare? So we're going to talk about looking at your balance sheet again, just to emphasize that one. So here's a famous illustration of your income, expense, assets, and liabilities by Robert Kiyosaki. If you look at it, most of the people who are suffering and in debt actually have their income go out all through expenses. And if you have more expenses, then you go negative and you're in the poverty line. Then there would be the middle class. The middle class would have their income, spend it on liabilities, and then become expenses. That basically also ends up costing them with no assets generated, as they basically just pay for their lifestyle while they're earning. Lastly, there would be the people who are wealthy. And you have to take a look at what they do differently, in which their income actually goes to assets, which then would make more money as income, which they could then spend on expenses or liabilities. This is something that is self-perpetuating and allows wealth generation. This again shows the different diagrams for the poor, middle class, and wealthy. It helps you understand where to actually focus your money and your expenses in order to move yourself and progress yourself into the building of wealth. Looking at our pay stub, you have to understand what deductions you are getting. These are expenses which include your healthcare as pre-tax and the various taxes that are actually deducted from federal, state, Social Security, and healthcare. Looking at USA facts, we could see the median annual wage, which is currently now up to $63,000. This table now shows the median annual wage broken down into sector, which ranges from $30,000 to $80,000 per year. This now serves as the basis of people's income. Now we're going to be looking at liabilities. First off, people's mortgage. The average housing mortgage is $1,709 per month. The average home price is $295,000. And the proportion of people's income to their mortgage is around $34,000, with a down payment made at $59,000. If you look at it, that's a significant amount of money going into your housing. Looking at rent, nothing better. It's at $1,468 average per month, which ranges between $1,000 to $3,000 depending on which state you are in. Looking at our expenses for transportation, you'll have to break it down into new car payment. Are you doing a ride-sharing app? Are you paying for gasoline and how much? Plus, you'll have to add your car insurance. The average total monthly cost for transportation is around $813. Looking at our other expenses, this actually includes $660 for groceries, $237 in subscriptions, $155 for clothing, $94 for a cell phone bill, and gym membership at $58. How much does this cost in total? It's around close to $1,200. These are things which you could save on. Other thing that you have to take a look at is how much money you're being deducted from your healthcare, which in 2018 was already up to $414, probably higher right now in 2022, and this is deducted pre-tax by your employer. Other thing to consider is childcare. You could see the large variation between $450 to $1,700 between Mississippi and Massachusetts per child. The average, probably close to $1,000. So, looking at the average median salary, it's around $63,000. Median is around $44,000. So, now let's actually plug it to our table. We've got income, expenses, assets, and liabilities. With an average of $63,000 per year, that would around be grossly at $5,250 per month. Then you'll have to do your pre-tax deduction and your taxes that you have to pay. Looking at expenses, house cost around average of $1,700. Car payment, average again at $813 per month. Other expenses, which we totaled at around $1,204. How much is our total? This would be around $3,717. So it looks like most of your income are going to liabilities and end up as expenses. Now we're actually going to look at our pre-tax deduction, which is around $414 for healthcare, and plus your federal tax, which is going to be, if you're married at the current salary, it's going to be around 12%. And remind you, this actually goes up with a higher salary. State tax, unless you're living in Nevada, Florida, or Texas, which has 0 state tax, and there are a couple more. Average could be between 4 to 8%, and we'll just put a ballpark of 4%, and this will then lead us to around close to $4,000 of net income. If you look at it, at $4,000 of net income, how much money is left over? Then we'll have to deduct our expenses, and this will now show that you have $283 of leftover. So this doesn't even take into account if you have children, which the additional expense could be between $400 to $1,700 per child per month, and that will definitely put you in the negative. And after that one, you'll have to understand how to manage your debt if you are in debt, how to manage your finances, and then looking at other forms or streams of income. Before you even think about further investments, you have to make sure that you catch things which are leaking. Imagine like a boat. If we are in a boat trying to row back to the land, as much as we're trying to power through moving the boat forward, if we actually have holes leaking in the boat, then we'd actually be better off sealing these holes first before we move forward, because it won't matter once the boat has sunk. That's how I look at your current financial situation in order to understand your balance sheet, in order to prepare you. So there you go. Step number 1, manage your finances so that your boat doesn't sink. There's a lot of people who are going to go under, and the concern is they may actually lose their house, their cars, go in foreclosure, go in bankruptcy. We don't want that one. So next week, we're going to talk about debt management. And after we've actually addressed all of those issues and get you to a positive net income, then we'll start talking about investments. Please click the like and subscribe button, and I'll see you next week.